Good morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Thursday, September 27th. Another down day, not as fierce as the day before, but yet nonetheless, we did get a gap lower in the spiders and in the broad-based markets, and we did sell off, closing below the 20-day. Most of the broad-based markets closed below their 20-day moving average. So the breakdown continues. S&P is down about 2.8% from its high in September. So not looking too pretty. However, we are oversold in the short term, and I'll show that to you. But the longer term indicators are telling us that they're getting to be on sell signals, and I'll show that to you as well. A couple things that I'm looking at. So what do we get overnight? Well, exactly like I had mentioned to you guys, be very careful about central banks around the world talking up their markets. So when they see some sort of a crisis brewing again, well, guess what happens? They start talking up their markets or providing some sort of liquidity round. And that's what happened with the People's Bank of China. They announced another round of their daily liquidity, which is their reverse repo operations. And while that injection is basically shy of some record amounts that they had last week, it really hit a new high. So as far as their liquidity injection. So there you have it. Markets are up pre-market 5.5%. Because of that news, Aussie dollar actually had a nice big pop, and then all of the risk-on currencies were higher, and of course the dollar lower. Now, eventually, it's not going to happen. It's all noise, and it really is. If you really look at the big picture, it's all noise. But we do trade intraday, and we do have a longer-term perspective. I do anyway, and but I like to incorporate both with seasonality influences as far as strengths and weakness, where we are at that point in time in the market. Now. We are in a seasonality weakness time period. The next few weeks, we do have, we should be looking for a continued pullback. I do think that we are ready for some sort of a bounce. A lot of the engulfing candles usually get retraced back 38 to 50% of that bounce before resuming its trend lower. Again, and that's can trump the charts, guys, and that's the world we live in right now. So we really need to use caution. That's why I personally am not looking to hold anything until this environment starts to subside and we get some normal patterns here, and then we can start looking to hold stocks. And I'm not saying you can't, but just use some caution, or actually buy a little insurance, because again, it is cheap. I do think that the third phase of this global recession is really starting to take hold, and again, that third phase being China. We did have a little bit of a reaction back to the Eurozone as far as the Spain bailout's concerned, of course, the riots, and that helped fuel a little bit of that spark to the downside. I do think that with the China impact, and clearly prime ministers and China leaders are already worried about what's happening in China. And again, that does take some time. So we don't want to look to just go out and sell Aussie dollar and buy the dollars itself in general. But legging into a trade, as far as legging into that type of trade, is definitely something worth thinking about. I do think that after this pullback subside and then we rally again, I do think that China reaction will take shape and really start to accelerate at the latter part of the first part of 2013. Now, longer term here, I'm still looking for a pullback. And then, of course, buy into this market going into the new year. Now, remember, guys, things could change rather quickly, but that's what I'm looking at. History repeats itself. We usually get that. Now, is this the end of this rally? Who knows? The end of the pullback? No one knows. But we are looking for, I'm looking for a continuation of a pullback. It's only been a couple of days. Yesterday being very shallow and quiet because of the Yom Kippur holiday. So, it's going to be similar to see what happens. Remember, too, we have window dressing. Window dressing really is going to start happening today, tomorrow. And if you get that liquidity injection in China, that could be just an all excuse to start buying the market again. So today, tomorrow could be an overreaction to the downside and to the upside, but I really want to see what happens next week. So we're just chopping around right now. We had a nice 2-day sell-off. We had a little bit of technical damage, but it wouldn't surprise me if we do bounce today or tomorrow because of the end of the quarter window dressing. See, the whole thing is there's a large hedge funds and mutual funds. Do they start taking money off the table, or they just protect their positions and look to bid up stocks until the end of the quarter, and then going into the fourth quarter, they take profits off the table. We'll get that little sell-off, and then, of course, that rally at the end of the year. So that's something that we want to really start looking to think about. But look at here. Nice big move. Nice big move here on lower. Yesterday we did it. We did kind of really hit low around 10.20, and then we flagged a little bit and then sold off. But it was very, very quiet day yesterday. Really, really not much going on, and also volume was really anemic as well. So just something that wanted to show you what price action was. But here's the NASI on a 5-3 stochastics I put on a weekly chart, and it really does a great job marking bottoms and tops. So if you can see here, top, bottom, and as you can see what happened here, top, and look, we sold off here for, this is a weekly chart, guys, so this is weeks we sold off, and then back again, and now we have a sell signal again. That now the end of the week is not here, so remember, this is a weekly chart, so we still need today and tomorrow to really finish off and see what happens. So this could actually turn back up again, but we are getting our signals that we have a weekly chart, we have a sell-off, a sell signal in the market itself. VIX had a nice day. If you remember, we had this inverted head and shoulders, slanted neckline. We're back up here to the resistance area. So, again, it wouldn't surprise me if we kind of roll. Looking for that higher low from the low here before we start accelerating. VIX definitely woke up the last few days, and that's nice to see, actually, because it's a real valid indicator. And when it just kind of chops around and does nothing, obviously it does mark extreme complacency, no fear in the markets. But, something that I'd like to see in the coming days and weeks, this market, the volatility index start to perk up. And even if the market starts to rally and the VIX doesn't sell off, that's telling you people are nervous looking to buy insurance. So, that's a great indicator to look at. Our trusty NYMO, great indicator. Obviously, really hasn't done much here all of August and part of September. We did get a little bit overbought, and then we sold off again. And now we're down here to that negative 44 percentile, which is still not really oversold. We can be oversold much more than this, as you can see here. So there's plenty of room to the downside in this indicator. So we could chop up, maybe spike up, and then roll back down again. So NYMO telling us that, in a bigger picture, we could sell off further without even the bounce. So this is telling me that we do have room to the downside. Now, I want to look at the U.S. dollar. As you know, the U.S. dollar is king. The greenback is king here. And what's going to happen is that right now we have this extreme complacency. We did have this long uptrend line. This is a daily chart. Weekly chart was still there. We hit it, rallied, bull flagged, and then just broke lower. And that was basically on the Fed QE3 news. Bull flag, we had a bullish falling wedge into support, heavy support here, and now we're basically flagging into that 200-day. So, what does this tell us? That it tells us that do we roll back over again? And it wouldn't surprise me because this is really a flag here coming out of this bullish falling wedge. Maybe make a little lower high, but I do think the dollar starts to rally and rally in a big way. And eventually it's going to rally despite, even if the Fed starts to raise rates, this dollar is going to really start to take off. And it's going to need some time, no question about it. But legging into a dollar trade, maybe a little bit early, but a lot of these commodity currencies, I know a lot of guys that follow me also trade the currencies as well as I do. And I do think that the dollar-Canada trade is a really, really, real good trade. But patience is warranted. You need to have a little patience. But I do think that the dollar starts to rally and rally aggressively. Maybe not right this second, as you know, because this is here is a bull flag. But it's a nice, and anytime out of these bullish falling wedge patterns, they do actually break out and then they back test. And if we want to see that higher low right up in here, maybe right up in this area, and then start to really accelerate to the upside. Okay, only time will tell. But again, watch the dollar. Dollar is going to be really key, and also the euro for that matter. Euro dollar, really, really key area. We're at the upper end. I don't have a picture of it, but I'll show you a chart tomorrow. Euro dollar at the upper end from the highs, 76% retrace. So, I mean, really extended here. Looking for a pullback in the euro as well. Okay. Now let's get into the charts here, guys. I'm going to run right through these. As you can see here, we had that bull flag pattern, broke out, right? Never broke out, but really started breaking down. Now we closed below the 20-day moving average. 2 big down days. Plenty of room to go here. I actually see this market coming right to the 50-day moving average. 1400, 1408, 1410. that would be a decent pullback before the market to rally and probably challenge the pre-2007 crisis highs. Okay, so that's what we're looking at here. Couple, maybe three, another chopping around a little bit, maybe a bounce back up, maybe take this candle back, half of this area, and then start to roll back down again. As you can see here, we're still overbought in our daily charts as well. Spiders daily, just to show you the volume. I'm surprised too because the Spiders did have a little bit more volume than it did on the previous day. Broke the 20-day moving average miserably, and look what's happening here. Just really a nice big sell-off. And if you have, we have this lower trend line, and as you can see here, we had this little wedge pattern broke out of the wedge. So we're right up into this, going to be right into the support of 142, 142 and a half. So I think that a bounce is probably in the cards. How deep of this pullback is going to happen between today and tomorrow? I'd say your chance is going to be probably 30%. We get a little bit further of a pullback. We might get that little bit of a bounce we're looking for into the week, and then hopefully turn around and look to try to sell off here again. Again, it's healthy to have this pullback. You want to look to buy stocks cheaper going into the new year. And getting for that looking for that Santa Claus rally. But look at these volume profiles. We're back into this heavy support area. So other than the fact break below 139 would get you down into this 137-ish area, 135 area. But again, we're kind of way away for now. So let's take it one step at a time here. Just want to drop it down to a 60-minute chart. As you can see, that flag pattern, we broke back down again. Heavy area here, little big band of support coming in at 1412 in the cash. And then, of course, 1396. So we do have a little bit of support here as well in the 60-minute S&P cash. 30-minute, just to kind of break it down for you. Same thing here. As you can see here, big pushback, bear flag pattern. Then we started to roll over. Very quiet day yesterday. Two sectors that I'm really looking at closely is, again, that's going to be the Russell and, of course, the transportation sector. Russell rolled back down. As you can see, we're starting to break lower. Really had 2 bad days, and a lot of the small caps really took it on the chin yesterday. And really not what we want to see. But, again, we broke below the 20. Let's see if today we can recapture that 20-day moving average and maybe start to rally back and take a little bit of this engulfing red candle. Now, that's going to be key to decide what's happening. Now, if this rally can stop right back up in this area here and start to roll, then I think we have something really to the downside. But I wouldn't start looking to buy VIX and looking to buy puts and start shorting the market as of yet. You know, look, shorten the market during the day if you can get a valid entry, absolutely. But I mean, to really position yourself short here for a 2-day push, I would be a little leery about that. But a transport starting to pick up momentum here. If you remember, we had this little area here, right? We had this lower trend line here. I remember I had a head and shoulders pattern and a symmetrical triangle. Well, we broke lower here, and then we actually came right up into this top. And if you remember, we had this little breakout here. Well, that was a false breakout on this day right here on 9/14. Markets sold back off really hard. So now this symmetrical triangle pattern, this apex, will come bring it right back down to here. And you look what happens. Now we're really clearly below this area. Technically have broken down big time in the transportation sector. I think that this transportation sector, all eyes will start focusing on this and say, hey, wait a minute, our economy is totally slowing down based on what has come out on FedEx, Norfolk Southern, Union Pacific. All these railroads and truckers are slowing down. That means demand is slowing for the economy. Not good. So this is something that we're going to really continue to keep an eye on. And this area here is really right now a do-or-die area in the transports. And I'm giving you the IYT because I like to show you the ETF. Real easy. A lot of people don't have the futures and or that index as far as the transportation sector. So I'd like to follow the IYT. Right here, last part of it, guys. After that, we have a small little support area, and then we should really start to flush lower. And if that happens, I think the transportation sector will take this market down. Real quick on the big cap tech, I mentioned Apple. I remember I told you on Monday would not be buying it here. Clearly worked out perfectly. Had a lot of emails on Apple, so hopefully you took the analysis on Monday and saved you a couple bucks, and or if you gotten short. So now, where do we go from here, right? So we're at this pivotal low on Apple, and this is another area here where if this area gets taken out, I could almost guarantee you guys that there's stops well below this area. So the naysayers, the buyers that bought all up in their area, they're out already. They're gone, right? So they took out this area and they're gone. Now we're looking at the 654 area. Big support will come in right up in here, right? You got the 50-day moving average, and you got this area here. So the volume profiles will come in 620. So a big area of support will be 645. If we lose 645, you're going to get 620. That's the bottom line. But I do think that we're going to probably get a bounce in Apple, and that bounce should be monitored if you guys are really looking to buy Apple and or looking to get short. So we'll see what happens with Apple. That's going to affect really the Qs. Just a quick look at the Q's weekly chart. Broke back down on this double top from a few weeks back, and this you see this channel here. We broke out of this thing, so we'll see how this weekly chart subsides for Monday morning's analysis. Daily chart of Q's last chart, guys, and then I'll let you guys go. I know it's a little bit winded, but again, approaching the 20-day moving average. So tech got clobbered. As you see here, the volume actually picked up. We had a couple of big distribution days, but we'll see what happens now the next couple of days. Remember, it's window dressing. Don't get chopped around with the market here. Let the market decide where we go, and see what happens with these big money managers and fund managers, and see if they really start to take out, take their profits and or defend their positions going into the end of the week. All right. Have a great day. We'll talk to you tomorrow. Take care.